Hey there, everybody. John Lillywhite here, and today I'm going to talk about the most frequently asked question I get as a mortgage banker, and it comes from the self-employed community. The self-employed community is growing, it's strong, and these people have decided to make their money more on a commission stream than as a salaried or a W-2 income. They've decided to walk away from traditional corporate America type jobs so that they can be their own boss. And personally, I love it. It gives them the freedom to do what it is they want to do, to be their own boss, but it also has its ups and its downs. You decide to work hard, you can make lots of money. If you decide not to work, your prerogative, you're generally not making money during those times. You also have the freedom through IRS laws and guidelines to write off business expenses, and this is very cool. But both of those things tend to force those self-employed people out of the traditional guidelines of Fannie Mae, Freddie Mac, FHA, and VA. Well, that's not necessarily fair. These people have just as much income, they have just as much of a revenue stream, they have just as many bills as everybody else. They just decide to make their money differently. And that's what my company does. We serve, in addition to the traditional loans, we serve this self-employed community with something we call the underbanked. Now, the underbanked loan programs are hugely make sense loan programs. They do not rely on the traditional sense of a W-2 or at a adjusted gross income on a tax return. We, for example, will look at the deposits on bank statements. For the last 12 months, we get bank statements, we add up all those deposits, we divide by 12, there's your income. It's really that simple, and it's that makes sense. The only caveat, and it's a very makes sense caveat, is the down payment requirements are higher. We will be more than happy to share the risk with you and your self-employment profession if you want to put down 20%. That makes sense. We have other programs that will allow you to put 25% down and only have enough money in a bank for reserves. You don't even need to show income. Now think about this. If you put 25% down, we don't need 12 months bank statements. We need to make sure that you have enough reserves in your bank account in the event that there's some kind of a crash and burn situation. That's it. We don't want to see anybody lose their house. We want to be part of this American dream. And the only way that we can do this is to make sure that we satisfy people in the underbanked community, that huge amount of people who have make sense incomes. They generate their income. They are free to be their own boss, and we want to support those people. So if you fall into this, or you know someone that falls into this type of a community, please let me know. I would love to show them how we can help them buy a home. You have yourself a fantastic day, and we'll talk to you soon, okay? Bye-bye.